today's session. We're going to start off by looking at freight in the time of COVID. We'll be talking some FMCG, freight management strategies, cost-saving strategies, and finally, rethinking risk management. And if you do have any questions, please feel free to type those into the chat box as we move along through the seminar. And I'll take them as we move, or else, of course, we can take them at the end as well. So I don't need to tell you that we're still in the midst of a pandemic. Every time we think it's over, we realize it's not. And I guess for those of us in Victoria, that is starkly so when we're still in a lockdown and will remain under some restrictions even after tomorrow when restrictions are relaxed. Now, as a result of those restrictions, of course, there are knock-on effects. And within the borders of Australia, that means that states have a tendency to close their borders to one another. And earlier today, there was an announcement that Queensland will be keeping their borders to Victoria closed for at least another 7 days, even after we come out of this lockdown. And that, of course, has some serious impacts on the way in which we move goods in and around Australia and also ultimately out of Australia. So freight is very much based on circularity. Everything around international shipping, whether it be air freight or sea freight, is based on circularity. Everything was severely disrupted in March, April last year when ports were closed, orders were cancelled, supply chains pretty much fell apart as a result of those initial clamping down restrictions when COVID became a thing first, and we realised that it wasn't going to go away in a hurry. Shipping lines reduced their services, but then slowly but surely things started to recover. So the first sign was that economies started recovering in spring 2020, but that recovery has been sporadic. So it's very much a case of 2 steps forward, 1 step back, and occasionally 2 steps forward and 3 steps back. Shipping lines, however, didn't quickly increase their services, and that particularly relates to air freight. So sea freight took some time to come back to normal, and we'll be talking in a moment about how that's occurred, but air freight still hasn't returned to normal and probably will not do so for a very long time to come. There has been a massive supply and demand mismatch in the freight world as a result, and it looks certain that these problems are going to continue throughout 2021. So if we look at sea freight, we can see that one of the major problems with sea freight is that containers are in the wrong place. Australia is a net importer, particularly from China, and we need regular services to take those empty containers back to China. So the empties are in the wrong place, which means there's insufficient storage for empties in Australia, there's a lack of supply in China, and there's a global problem. China to Europe, China to the US, all those routes are very heavily affected. Now, the top 10 carriers at the moment operate 85% of global shipping capacity. 4 groups, namely Maersk, MSC, CMA, CGM, and COSCO, control more than half of the sea freight capacity. And the top 7 control 78% of the capacity. Now, what does that mean? It simply means that whether you're getting goods in or out of Australia, you are in the hands of very few, which means competition is slow. When we turn our minds to air freight, and air freight is one of those things that is integral to many freight supply chains, air freight represents a very small proportion of Australia's international freight task by mass, only about 0.1%, but it does represent around 20% of trade by value because it is the high value freight that mostly goes by air. Some agricultural sensitive high value exports are very dependent on aviation, Around 80%, for example, of all our seafood is exported by air. Now, in the FMCG space, this is particularly marked when we're looking at perishable goods, but it's also marked when we're looking at goods that need to get to their end destination quickly, not because they're perishable necessarily, but because they are in very high demand. So at the height of the COVID pandemic, the initial height of the first wave, things like hand sanitizer, for example, were in incredibly high demand in the FMCG market, and the capacity was seriously limited to get them to where they were going. There wasn't time to put them on ships. They needed to be air freighted to get to where they were. So if you were a manufacturer of hand sanitizer in Australia, and many companies switched their supply from, example, making alcohol, consumable alcohol like gin, to hand sanitizer, if those stocks were needed overseas, they had to get there by air freight. So IATA figures for April of this year show us that the cargo ton per kilometre was up by 12% compared to the commensurate period 2 years ago. Capacity, however, remains 97% below pre-COVID levels, and that is because passenger aircraft have been largely grounded on international routes. There are international flights, but there are severely reduced numbers of international flights, and that means that belly space, which is where most of the air cargo goes, is also commensurately reduced. Dedicated freighter capacity rose by 26% in April as more aircraft were brought in to be purely air freight. But belly cargo capacity decreased overall by 38%, so there is still a net loss in capacity. Now, Prime Minister Scott Morrison a couple of days ago announced that international borders are likely to remain closed indefinitely. That, of course, means that international flights will remain at a low level indefinitely, and that will have knock-on effects to pricing and belly space. Now, for those of you who are in the FMCG space but have critical goods, and particularly time-critical goods and goods that have to be air freighted, there is the International Freight Assistance Mechanism. It's a targeted support measure that was put in place by the Australian government to help keep global air links open in response to COVID-19. It all happened last year, but earlier this year in March, the Australian government announced that this fund would be extended to the end of September, giving all those businesses that are reliant on air freight a little bit of extra breathing room. Now, it is the end of September, but the end of September, of course, is actually really close, which means that if you have been reliant on IFAM, you need now to be putting measures in place to deal with what happens when there is no longer assistance, and those full freight rates are going to be passed on to you as a business. Certain products are eligible. They're not eligible in terms of product classes, but rather according to a series of principles that are applied. So if what you supply is high value and it's time sensitive and it's reliant on air freight due to perishability, then you can make use of the scheme. It's a fairly loose way of looking at things. And if those three factors don't come into play, you could also draw on the IFAM if you can't send your product by an alternative to air freight, if it has limited shelf life, or it's required to meet a sudden or immediate need. And that's a very important one, because that applies to things that are not perishable, or if it's deemed otherwise to be in the national interest. So if you can prove that Australia really needs this export, and the only way that you can get it out of the country into the hands of your customer is by air freight, then of course you can apply. And there's the address you can see to find all the information and to check your eligibility criteria. So what do we think the future might hold for freight? Well, shipping lines could be requiring bonds for detention costs. there is an increased number of goods that have been abandoned at ports simply because people can't afford to pay the demurrage when something has been delayed and a shipment sits there. So shipping lines could be looking to recoup the cost of having to dispose of those goods. We're looking at shorter, far less complex supply chains, certainly for the foreseeable future, because that helps us cope with disruption. There's a requirement to plan well in advance. Now, having said that, we all know that we live in really uncertain times and things change on a dime. But as far as you can plan, and that means you need to strategize appropriately, you certainly need to. There will be continued high costs as uncertainty remains, and we all have to be looking at digital initiatives to help us improve efficiencies across our supply chains. Trade tensions, of course, are at a certain heightened level, and they are likely to continue to be so. So, geopolitical issues that include things like banned products, higher tariffs, charges of dumping, etc. And many of these measures are put in place with little to no notice. So, let's look now at fast moving consumer goods in some detail. Now, of course, if you're in the FMCG sector, and I'm assuming that everybody on the webinar today is, but I do know that we have had a few students and others that have been attending these seminars. So for the sake of all those of us who just need a refresher, fast-moving consumer goods or consumer packaged goods are products that are sold quickly and at relatively low cost. So things like non-durable household goods, over-the-counter drugs, toiletries, other consumables, etc. Many fast-moving consumer goods have a very short shelf life. Now, that's not just because they deteriorate quickly, but because of high consumer demand. And a classic case of that was toilet paper at the height of the first wave of COVID-19. Not perishable, but boy, did it fly off the shelves. Some FMCGs, such as meats, fruits, dairy, etc., of course, are also highly perishable. Other goods such as prepackaged foods, lollies, toiletries, very high turnover rates, and sales can also be influenced by seasonal periods and discounts offered, and that affects how you, as the producer of these goods, need to get the goods into the hands of your customers and how quickly you need to be able to do so. So when we look at the characteristics and some of the logistic challenges around FMCG, the main characteristics: high volumes, low contribution margins, extensive distribution, and high inventory turnover. Things move very quickly in this space. When we look at the other side of the equation, challenges that are faced by people involved in FMCG. Supply chain strategies can be severely disrupted when there is disruption in the market, such as COVID-19, such as crises in shipping. When we look at the recent case of the Suez Canal being blocked and so forth. Sourcing and procurement, of course, is always a challenge, particularly in those goods that are in high demand. Network optimization is absolutely crucial to make sure that there is visibility across the entire supply chain. Counterfeit detection, very important, particularly if you are exporting goods that are in high demand. High demand goods also mean that criminals come out of the woodwork, and that means that goods are counterfeited very often when they are in demand, and that adds a layer of cost to you to make sure that your goods are protected and that your customers know that what they're buying is not the counterfeit. Authentication and traceability, again, very important from the counterfeit perspective, but also from the perspective of making sure that the goods originate in Australia if you are claiming origin, for example, under free trade agreement rules. And again, that the goods are authenticated so that everybody in your supply chain knows what you are supplying, how you are supplying it, where it has come from, where it is going to, and that it is indeed the thing that you say it is. Scalability and capacity, the ability to bring goods in quickly, get them out quickly, ramp up production as you need to, and scale back production when you need to. Recalls, fact of life in fast moving consumer goods. Invariably, there are goods that will have to be taken back, and of course, the reverse logistics that apply to that. So, those are all challenges, and those are all things that have to be taken into any freight and logistics management strategy that you have in place and that you need to adapt to deal with the current environment. So, just a couple of things that are not necessarily freight, but they do certainly feed into your freight strategy. Your warehousing. There are challenges around the very complex FMCG supply chains, high volume, low margin. You need to get things far and wide, and you need to get it there very quickly. So, storage and distribution is crucially important. You need to know what you have at the drop of a dime, and you need to be able to get it out the door and into the door as quickly as possible. It's very important to plan appropriately so that you can sustain profitability. And that is particularly important at the moment where you may have to pay more for your freight to get something into the hands of your customer more quickly. In factory logistics, so everything that you need to do to absolutely maximize the profitability and the efficiency of your manufacturing. And this covers the movements of goods within the manufacturing and processing plant, everything from raw materials, from receipt to intermediate storage, components, sub-assemblies, etc., either to or from stocking points or line sides, turning into finished goods, bringing finished products out of the factory gate, and intermediate storage for dispatch outside the factory. And then in-plant logistics also covers intra-unit movement for goods. When we start turning our mind to logistics, of course, there are a number of things that come into play in this space. So FMCG logistics involves services such as material handling, packaging, transportation, inventory, security, etc., etc. Much of that is determined by what it is that your customer requires of you. FMCG logistics providers are responsible for the delivery of materials or goods from manufacturers to consumers, and the market comprises 3PLs and 4PLs. So, depending on where it is that you provide and want services, you might use a 3PL that does everything other than the front end of your logistics, whereas 4PL, of course, takes over everything, including the managing of your 3PLs. Inbound, outbound logistics, reverse logistics to get those returns, green logistics, which is becoming ever more important, particularly on the consumer side. Consumers who are buying from your customers want to know that the goods haven't got too great a carbon footprint. So they want to know that they have been transported in a way that absolutely minimizes the impact on the environment. And then, of course, there are military logistics because FMCG goods also cover the military. I don't think there's anybody on today's webinar that is involved in that side. The global landscape at the moment looks like this. Asia Pacific is dominating the market, following by LAMEA, Latin America, North America, and Europe. China dominated the global market up to and including 2019, but India is starting to gain, and they're expected to grow at a significant rate going forward in the FMCG market. The global FMCG logistics market, driven by rise in the penetration of e-commerce, as more and more businesses are selling online, that is having a significant impact on freight and logistics, particularly in that fast-moving consumer goods space. Changing lifestyles. People are living differently, so they are buying differently. Rapidly evolving consumer habits. So people are changing very quickly what they require, and that is very much dictated by what is happening in the broader world. So when we look at COVID as an example, we look at that toilet paper and hand sanitizer thing. that was buying habits, and people have changed dramatically. It's almost impossible now to go to a supermarket and watch somebody shop without them having at least hand sanitizer or toilet paper in their basket or their trolley. We've all got used to stocking up on those items which we expect might be short supplied again in the future. People have more money to spend overall. And of course, we're looking in very general terms here, but people generally have more money to spend, certainly than they did, our parents did, for example, and therefore they have more money to spend on stuff. There's a great rise in tech-driven logistics services. So maximizing efficiencies by increasingly using technology. And that means that businesses who are feeding into supply chains need to maximize their reliance on technology as well. If your customer is very mechanized and your customer is very digitized, they are going to expect the same thing of you when it comes to getting your goods to them. And then, of course, there's the increase in the adoption of IoT-enabled connected devices. We are, through the Internet of Things, letting the machines talk to one another, and everybody needs to be part of that conversation. Looking further into the global landscape, poor infrastructure, higher logistics costs, lack of control of manufacturers and retailers over logistics hamper the growth of the global market somewhat. If you can't get the goods somewhere, it's very difficult to grow the global market. So developed markets are growing. Emerging markets are starting to get there, but the lowest developed countries are still really struggling with infrastructure, and therefore it's difficult to grow FMCG in those markets because it's difficult to get the goods through them. Last mile deliveries, logistics automation, cost cutting, lead time reduction, adoption of multimodal systems are all impacting the sector. And because they're impacting the manufacture and supply, they're also impacting the bottom line. So the global FMCG logistics market, segmented based on product type, food, beverages, personal care, etc., service type, whether it's just transportation, whether it's warehousing, value-added services, the mode of transportation that is being used. And of course, in Australia, if we are exporting, we're looking only at waterways and airways. But to get to those waterways and airways, we use road and we sometimes use railway. In the rest of the world, particularly if you start thinking about the last mile, all of these modes of transport come into play, and then a whole heap of others as well. And then the region, whether it's North America, Europe, Asia Pacific, or Latin America. The key players operating in the FMCG logistics market, so these are the service providers, you see them there, and pretty much all of those operate in Australia and in all of the markets that we've talked about. So let's look now at some freight management strategies. Now, appropriate freight management, of course, is not only essential, it's also a source of competitive differentiation, and it's an enabler of strong financial performance. So three main things: cost, service level, and supply chain. Cost, very important. It's the bottom line at the end of the day. If you're not making enough money, you don't really have a business. If you have a robust freight management strategy, you will be able to contain the cost of your inbound and outbound logistics. And if you don't have that, poor performance supporting your organization combined with those high costs will certainly add up and will hamper your performance. Service levels are a bit of a no-brainer in that if you can't supply as your customer requires, your customer will find what they need somewhere else. And at the moment, in this current climate, post-COVID and still within COVID, there has been very much a focus inward in many markets where they are choosing to source rather from their own country than outside. So if you are struggling to supply, you just make it that much easier for your customer to make the decision to purchase closer to home. Supply chain management. Very, very important. If you manage or are hoping to manage a reasonably effective supply chain, you have to streamline your supply chain and you must have visibility end to end. You need to know when goods are coming into your company, where they're coming from, how they move through your company, and how they leave your company. So, what is your strategy? And that, of course, is something which has to be left up to every individual business. But things that are dead certain, you have to improve efficiency. Before COVID, one could probably get away with being a little bit slack when it came to efficiency and optimization. Now, when you are looking at your margins being eroded by high cost, efficiency is vitally important. You have to optimize your inventory. This is definitely top of the near term agenda. And this is because you cannot afford not to be able to supply, but by the same token, you can't afford to have stocks sitting on a shelf that are not shifting. In the longer term, the focus may shift to reducing days sales outstanding and protecting days payable outstanding. And those are all things you have to look at in the context of your own business. It is incredibly important to have a whole of enterprise approach. The pandemic has very much brought an holistic supply chain planning into focus, and that includes diversification and to some extent also localizing and having contingency plans. So if you can't get supply of a certain item, how are you going to replace that so that you can produce your final product for your customer? The rethinking of inventory buffers, just in time, really very fragile and very difficult at the moment. Everybody has to face the reality that we need to contain more stock than we did before the pandemic. Point of sale enhancements. So, how are you going to ensure that your customer likes what you do? And then, of course, last mile capabilities. Now, to some extent, the last mile is out of your hands because your logistic provider deals with that, but it does add cost. The more difficult the last mile, the higher the cost of the service that is provided to you. So, you probably want some oversight in that as well. The pandemic definitely exposed the weakness of global supply chains to the risk of disruption. I think everybody was a little bit complacent for a few years there where we all thought we had it nicely stitched up. Then the pandemic came and all those things that we thought we knew about supply chains was turned on its head, and there was very little that one could do in the short term to change that. Now is the time to actually change that in your own business. The shift to e-commerce and local supply has changed the way that stock was required, and it has placed additional pressure on turnaround times. People getting things sent to them via e-commerce has created an expectation of immediacy. There's also a much greater focus on sustainability. Customers expect even greater transparency now to vet that goods are safe and that they are ethically sourced. It's vitally important to develop digital capabilities across your supply chain to increase visibility. It will certainly make your life a lot easier. And investors, and it's an important component of any business to have people who want to invest in your business. Investors too are more ESG conscious, so they want to know about those environmental, social, and governance issues now. They want to know about waste reduction, emissions, recyclability, and all of those things underpin whether they will invest in a business or not. Key component of your freight management strategy needs to be mode management. So depending on the size of your company, the location of you and your suppliers, all your facilities, and where your customers are, you may need to use some combination of road and or rail to get to the port. So if you are in regional Victoria, road alone might not be the option for you. You might be looking at railing to the Port of Melbourne. And of course, sea. Now, we don't have inland waterways in Australia through which we get things. We do sometimes sail them around from one port to another. So if you are supplying domestically, you might very well be doing that thing. But if you are looking at the export, then certainly we don't export via inland waterway. We just do it through sea. And then, of course, there's air transportation. You need to choose the most appropriate modes for your needs, and you need to be flexible if you can. So, if you don't have to use air, can you go by sea? If you've got the time, if it's not something that's perishable, if it's not needed urgently, then sea is certainly going to be cheaper. End-to-end supply chain visibility, we've already touched on, but it is very important to bear this in mind. And here, connectivity is crucial. Also, accessibility across multiple electronic devices. So you want to have visibility of your supply chain, not just when you're in the office, but if you need to access it because there's some crisis at 3 a.m., you need to want to be able to do that on your mobile phone. And that also means tracking the provenance of your supply chain. Freight and logistics in the real world are dynamic, and COVID has certainly snapped that into focus. And of course, as we've mentioned already, it's not just COVID. There have been all sorts of other things that have disrupted supply chains over the last 18 or so months, including the Suez Canal crisis, including China holding up certain shipments as they were looking at whether these could be seen to be dumping, etc. All of these disruptions have caused changes in capacity, and the dynamics will impact the rate that you will have to pay for freight and logistics services, and they'll affect your ability to deliver goods to your customers. And that means your entire team needs to have its finger on the pulse of what is going on in the industry. Proper planning, advanced visibility, absolutely crucial, because you need to proactively manage disruption without causing issues in your supply chain. Cost saving is, of course, a major component of what we are talking about at the moment post-COVID. So let's look at some of the ways in which you can look at minimizing your cost while at the same time maximizing your efficiency. The first thing is to maximize your load. Maximizing cargo loads is the single most important strategy for lowering freight costs. The more boxes or products you can load into a vessel, whether it be sea or air, the less you will end up paying per unit. If you are air freighting, it's also really good to note that air freight companies, particularly the dedicated freighters, want to reach capacity before they send the vessel. So if you're willing to pay for more space, so you might not use all the space for which you pay, they will discount your unit price, and overall you could come out winning. Again, choosing the right transportation method is very important. Air transport, expensive, of course, but it can help you save money when you ship internationally because there are fewer stops and therefore less handling cost along the way. If your customer is not particularly keen on getting the stuff, so they've said they want an order placed, but it doesn't have to be there at any particular time, then you do want to look at using sea freight if you can, because it will save you a lot of money. You have to learn to prioritize. So time, definitely money. Faster can be better if costs are equitable. Be aware of those things that are not urgent. The slower you move items through the freight system, the lower the cost is to move them. Improve your packing. So is your packing optimized for empty air pockets? And when all else fails, call in the experts. You're already working with a freight forwarder. Now is the time to reassess that relationship with your freight forwarder. Are you using the right freight forwarder? Has your freight forwarder perhaps become complacent? You need to call them in, you need to look at what you've been paying for, and you need to look at what you need to be doing in the future. So just as you need a whole of enterprise solution when it comes to your freight and logistics management strategy that needs to work hand in hand with your manufacturing strategy and your overall business strategy, so your freight forwarder and your customs broker need to be with you in that equation. And if your current freight forwarder is not doing the job for you, you need to look at finding somebody who can. A huge component of your strategy in the current environment, and in fact, generally speaking, is managing risk. Now, if you've attended previous sessions, you will know that we've talked at length about Incoterms, but it really is very important that at the moment you reassess the Incoterms that you are using. You have to be using Incoterms 2020. So if you're still using 2010, please throw away that schedule and get yourself a copy of 2020 and make sure that you're using the right set of Incoterms, and be very careful about the Incoterms that you are choosing now. Just as you need to be reassessing all your sales contracts and you need to be rethinking cancellation clauses, delivery lead times, etc., so you need to be looking at the Incoterms that you're using. So the E and F terms, little cost associated with them. The C and D terms can have a great deal of cost associated with them. Freight costs can be incorporated into your sales price if you're providing credit to your buyer, and you're effectively subsidizing the cost of freight if you are providing credit. Average payment terms in international trade typically between 90 and 120 days. Of course, forwarders and carriers want their money well before then, so bear that in mind in those sales contracts and in terms of the Incoterm that you're choosing. Be certain what you're agreeing to pay for. For C terms, sea freight charges are additional to the freight rate, and that's not unusual. Of course, double dipping can occur, so just be aware of the term that you're using. And if you're choosing the D terms, do you really know the costs? Freight rate's only part of the problem. If you've chosen DDP and there are delays at customs or other bottlenecks, you will be liable for extra demurrage charges, and these, because you're paying for them, are going straight off your bottom line. And then talking about those contracts, reassess all your force majeure clauses. Bear in mind that when COVID hit, force majeure was called into place because it was unexpected and unforeseen. Now, COVID is very much a part of our lives. You cannot claim force majeure for COVID anymore because it is no longer unforeseen.